Good afternoon. We will get started. Toot sweet. We have a very, very full audit agenda. So welcome this afternoon. We have regrets from Councillor Turner today? We're not sure. Okay. So I'll look for any disclosures of pecuniary interest. Seeing none, we have a scheduled item, which is London Middlesex Housing Corporation, and we have both their chair and chief executive officer here. And this is the result of a PwC internal audit. And just for a reminder, as the contract with PwC came towards its end, we had some space in the budget to achieve one more audit, and I think there was something on municipal side of the fence that wasn't really timely or appropriate to go forward, so we were able to take that capacity and swap it out and move forward with London Middlesex Housing Corporation. So they're reporting out on that, so I'll look for an introduction from you, Ms. Barbone, or?
Through the chair, I'll just give a really brief intro. So further to that engagement, PwC did conduct their audit, so it would have been presented to their board, and on behalf of their board, they will be presenting if they have any questions directly, that you can forward the questions to them. But from our perspective, we've looked at it, and there's no surprises here from some of the discussions that we've had through there are LMHC discussions as well, and certainly our asset management staff will connect with them as well to assist them through the development of their asset management strategy and also through the budget process for any future requests that will come through.
Thank you. Mr. Brown? Mr. Basili? And to provide some context, London Middlesex Housing will be reporting out to Council on Monday at the SPPC meeting, as were the shareholders. So some of this will be a good preamble to that conversation.
Okay, thank you very much. I think I've met everyone here, but I'll introduce myself, Michael Bazzelli. I'm bringing you this presentation on behalf of our board at London Middlesex Housing Corporation. I'm joined by my CEO, Josh Brown, and we'll try and make it quick. We know that you have a full agenda, and we should say right off the top that I think the plan initially was to have PricewaterhouseCoopers join us for this presentation, but the main point people who've been part of this process along the way I think are actually out of the country, couldn't be here today with us, so it's up to us to give you the presentation. But as Ms. Barbone just said, there's no real surprises in terms of the report that you have. We've given you a pretty substantial package, the letter dated June the 7th, and all of the other material with that. So we thank you for the opportunity to present, and we look forward to further conversations on some of the content going forward. Just by way of background, on February 28, 2013, Council requested that Civic Administration work with us through PwC to have a look at some of the shared services that we could take advantage of at the city in terms of some of the work that you do that is similar or the same as the work that we do at LMHC. And you made PwC available to us to do that work. And I'm not going to get too far into what that initial phase looked like, but it's been a phased process. The main point right off the top is that although PwC is not here with us today, that's been about 5 years of learning that's informed the report that you have before you today. So there's been quite a lot of work done on learning about us in addition to learning about the city and some of the work that we can do together, but also some of the ways that we're proposing that we change who we are and what we do, and what the needs are around that. The review of Phase 1 was a review of looking at shared services, and particularly in the context of the city's procurement of goods and services policy for purchased materials and services, and looking at the ways that that might align with what we do at LMHC. And that's actually an ongoing conversation in many respects. So there's lots of things that that LMHC focuses on in discharging its work, and sometimes we can really take advantage of what the city does in terms of waste collection or technological services. And that was some of the findings of Phase 1, but as I say, that's an ongoing conversation. The real story is the work that began as part of Phase 2 and grew out of this committee. So the Audit Committee meeting of December 7, 2016, which asked that we look a little bit more closely at a second phase of a review of shared services. This work was undertaken at precisely the time that LMHC itself was just beginning the work on its new strategic plan. We've presented that to you a year ago now. And it was in that context that the second phase of PwC's work really took on a slightly different scope. And it became more than looking at shared services and at issues like the questions around reserve funds that may or may not be held at LMHC in the context of our shareholder agreement, but also the kinds of things that London Middlesex Housing Corporation aims to do in its ambitions in its new strategic plan. And so it was in that same moment that PwC was doing its work that we were developing a new strategic plan. And so the scope of that phase then widened to take into account some of these new considerations. So we're still obviously availing ourselves of any opportunity for shared services, but the scope for the PwC review is really about what it is that LMHC is and wants to do and needs to do at this moment in its history. LMHC is 17 or 18 years old now. We have a new strategic plan. This is the first time since the provincial downloading of 2000-2001 that local housing corporations, including LMHC, has had to really redefine itself. And it's within that context that the PwC report is really timely and identifies some of the issues. It's really important as we think about the report that you have before you in this presentation that there's a number of business processes that are implicated in the findings that PwC presents. It's important to bear in mind that the framing of what you see here is from a risk perspective. That we'll see why that's important as we go through some of the images, and then I'll turn it over to Josh to speak specifically to some of the findings as well. So the risk frame is really important, even though the findings speak to a broad range of issues, some of which we've presented to you already, and others are unfolding as we speak and will be coming forward in future as well. I'll just cut across these quickly. Josh will say a bit more about each of these in the second half of the presentation, but they have to do with capital funding. You've heard about that in the context of our presentation of the VFA report. Support costs in terms of some of the internal challenges and constraints we have around tenancies, for example, in addition to capital assets. The priority list in our intake process in terms of new tenancies. The flexibility of our operations, particularly in the context of the shareholder agreement. That's one of the attachments you have to our letter for today. Budgeting process, and then also reporting, including reporting on some of the new kinds of business processes that we're thinking about and proposing that we do in the context of our new strategic plan. The risk framing is important as we look at this image that's provided by PwC, and particularly if you focus on the vertical axis on business impact. So this is business impact against ease of implementation across those 6 items that I've just described. And on the next slide, actually, we see a rating scale that PwC uses that describes their findings as a business process broadly defined as satisfactory, needing improvement, or unsatisfactory. And the reason why I'm emphasizing that it's important that we consider this in the context of risk is because in one way or another, from our point of view, everything needs improvement. So number one is something we've presented to you on multiple occasions, which is insufficient capital funding for capital assets. As you know, we steward those technically on your behalf. They're the shareholders' buildings, but we think of them as our buildings, and that's the way we go about doing our business. And so you've heard a lot already about capital funding. And they rate that as needing improvement. Similarly, for the impact of the tenant intake process and the tenant priority list. Those processes are processes that we don't necessarily have control over, but have a significant impact on how we can operate. And so PwC, I think, has rightly found those as needing improvement because they represent a risk to us now and going forward. On the other hand, still above the halfway point on the business impact axis is the second three items: flexibility with the shareholder agreement, the zero-based budget process, and then the operating expenses by function. All of them listed as satisfactory from a risk point of view, which is to say, if all LMHC wanted to do was continue to be a landlord and manage capital stock, there's relatively little risk. It's satisfactory that we continue to maintain the capital stock, of course, notwithstanding the capital shortfall. So if we're operating within the shareholder agreement as it is now, there's little risk from the point of view of LMHC doing that as strictly only as a landlord. Given that we obviously cannot be only a landlord, given the tenancies and the operating environment, we would say that while it's satisfactory from a business point of view, there are also challenges there. So number 4 is on the top half there, and I want to highlight that. So flexibility with the shareholder agreement, that's one of the attachments that you have with today's letter. And we also obviously want to work on 5 and 6 as well, the budgeting and the operating expenses by function. So that sets a bit of a context for the presentation, and Josh will take you through each one of those 6 themes in the remainder of the presentation. Thank you.
Great, thank you, Michael, and thank you to the committee for having us today. Certainly want to respect your time and recognizing that you do have a full agenda today. I'm not going to spend much time on the observation, the business impact, or even the action plan that was identified by PwC, because that's certainly available for you to read in the report. What I do want to really highlight is our response to those observations that were identified. So the first one, the capital funding, one of the things that really talks about advocacy around capital assets, our strategy, our innovation around regeneration. So certainly LMHC has and will continue to provide information, education, and advocacy to the funding agencies that we do have, and that includes the City of London and the Province of Ontario, to ensure that there's absolutely transparency about the urgency and the immediate need for capital funding. As an important first step, we had actually provided that information to SPPC. We did do a BCA that identified a significant amount of capital was required to keep our buildings at fair condition. More recently, LMHC participated with the Ontario Independent Local Housing Corporations Forum and submitted a response to the Ontario government around their idea around social housing modernization. And part of that, which you do have as an appendix to our submission, talks about or highlights a number of current issues and recommendations related to capital repairs, investment reserves, funding assets, and planning. We've also provided through that form basically a number of facts that positions us as independent LHCs in terms of our ability to help communities across Ontario meet local housing needs through entrepreneurship and business innovations. On the capital asset strategy side, we certainly are working with the city to ensure the asset management strategy that we are developing can be incorporated into the City of London's corporate asset management plan. Certainly looking at and considering innovation as a ways to look at alternative sources of revenue and to work with civic administration to reduce the capital funding gap identified in that VFA report. And you may know that through the HDC, we've been working with them along with Housing Services to begin the process to develop a strategy and to support to undertake the regeneration of public housing, which is certainly part of the London Plan. In terms of support costs, We recognize that a stronger, more responsive social housing system is one in which collaboration and relationship building and partnership is fundamental. So despite these challenges that PwC identified around the support costs and the business impact, we are committed to working with Civic Administration to review and revise the intake process for housing, with the vision that would have an access system that assesses individual needs and choice and then matches applicants with priority housing and the required level of support and assistance to maintain housing stability over the long term. We have also taken a significant step forward to look at new ways to provide supports to our tenants, and partnering with the London Middlesex London Health Unit and regional HIV/AIDS connections to look at establishing a supervised consumption facility at 241 Simcoe. I think this collaboration will help us to leverage a shared community asset for the benefit of the whole community while improving tenant safety and certainly increasing support services that are desperately needed in social housing and specifically at 241 Simcoe. In terms of the priority list, focusing more on in terms of our response, there's certainly a misalignment that they've observed between the housing policy and one of which is around housing first. So LMHC, as the largest rent guaranteed income housing provider in London and Middlesex, has never been fully equipped to operate within these models. Both provincial and local access rules require a high percentage of new tenancies be offered to individuals from special priority and urgent status lists. This means that a significant number of new tenants experience chronic and episodic homelessness, violence, addiction, and mental health issues. Multiple research studies have shown that those experiencing chronic and repeated episodic homelessness often are coping with multiple complex barriers to housing stability, including mental health, substance abuse, unemployment, and relationship challenges. In response to this issue, LMHC has drafted a proof of concept pilot, and this was attached to the submission as Appendix 4, to support housing stability within social housing programs for the City of London's consideration. In terms of the budget process, the PwC observed that there was a zero-based budget, or moving towards that to align with our strategic plan may help. Certainly, LMHC is currently working on achieving our strategic objectives in our 2017 to 19 strategic plan. One such objective is to develop a comprehensive financial plan. Through the implementation project associated with objective, LMHC is developing a financial planning process that is both long-term and integrated with our annual organizational plans. Although this is a new approach for LMHC, we understand that a well-thought-out financial plan is crucial and will help serve as a guideline for future performance and provide the information needed to make informed strategic operational decisions. In terms of reporting, PwC observed that we may want to move to a reporting by function rather than just specific expense line items. Our response to this is, though, we've actually shifted away and have a new ERP system, so we need to look at understanding our data and measure our impact in a much more real way. Certainly, to move in this direction, we would support, but we do have challenges in terms of our resource and our ability to do that with the system that we do have. Finally, we wanted to talk about the flexibility in terms of the shareholder agreement. The observation by TWC is that we did not have the flexibility that will allow us to really move on our strategic plan. And so what we've responded to is that although we don't have that flexibility, since the time it was developed, and that was back in June 20th of 2011, certainly housing has definitely evolved, which is true across Ontario, social housing sector. So this lack of flexibility really restricts our ability to respond to the growing and challenging needs, such as a unique and the capital deficiencies and the changing demographics in terms of our tenant population. So what we've done is we've attached a discussion paper, I think that was attached as Appendix 5 to that submission that has been provided, that highlights areas for the City of London's consideration and review of a future shareholder direction. That will certainly be part of our presentation to SPPC next Monday. So with that, certainly answer any questions, so thank you.
Okay, thank you very much. And one of the things I'll just say from the chair that I appreciate is that London Middlesex Housing is not approaching the issues from a business as usual perspective, and that's encouraging. So just in terms of scoping of this, much of the issues that are being raised here through this report are outside of the purview of audit committee to give direction. So, and many of them, as has been alluded, will be budget issues or shareholder discussion issues at SPPC. So just to give context to where we're at, I'll turn to my colleagues for comments or questions.
Thank you very much. I think the recommendations are good. The challenges are great in some instances. Reading through this, I was interested in moving, even right here, recommendation 3 and 4, but as was alluded, that's probably better done at the SPPC meeting, so I'll be moving those for sure. I would do it here, but I was told if I wait, they could let me take an extra cookie home, so I'll abide by the process then. So just a quick question. You talked about 241 Simcoe and the locating a supervised consumption facility there.
Just a point of,
Yeah,
if we're going down that road, I have
if
to
we go
declare
down the road
pecuniary
of
interest.
supervised consumption side, Councillor Turner will have a conflict, as will I. And so,
Okay.
if we could, if we talk about supervised consumption sites in the general concept, only Councillor Turner will have a conflict. Oh, sure. If we get to a specific address, then I have a conflict. So, so if you can just sort of ask your question in a more broad sense.
Okay. So, yes, I was looking in terms of providing services, and do you see that those services provided in a particular place would be matched to the tenants that stay there? Is that, if you started providing various services in various residences, would you see moving tenants around to match those tenancies to the services provided in those locations?
Was that clear? Through the chair, certainly the challenge for us is that we don't understand what the support needs are of individuals coming into housing. So very much we respond in a reactive way where it's too late and housing in terms of their stability or the tenancy becomes at jeopardy. What we are now doing and looking at and having conversations about it, and this is actually has brought that forward with the discussion of safe consumption facilities. How do we maybe use that facility in a different way to do supportive housing to really match up the needs of the tenants that may not necessarily be there, but maybe coming into that with other support providers. So certainly we are looking at that because it is a significant challenge, and we do have buildings and communities that are under-resourced and need supports.
Thank you. Other questions? Councillor Turner.
Just really quickly, we just so happen to have all the consolidated financials for everybody with us today, so the confluence is nice. But with a lot of these objectives, and obviously the capital requirements are key in this. A couple things I noted that recognizing, of course, energy costs do fluctuate significantly from year to year. This past year saw the LMHC in a fairly positive position with respect to energy costs compared to the previous year and compared to the budget. Is that through any capital investments enhancements, or is it due to market rate and fluctuations? So, I mean, energy efficiencies in the capital stock itself, or are these also things that could be seen as potential areas for reclamation in the budget as we improve the capital stock itself?
Through the chair, certainly I didn't come prepared to answer any questions that relates to finance, but I can certainly provide you some high-level information, some broad sense. I think it's two aspects. One is probably energy conservation as it relates to the tenants and education programs. Certainly, we try and leverage as much as possible any type of incentive programs through our partners like London Hydro, Union Gas, for example. So we did receive, I think, about $74,000 in incentive in 2017. So certainly that's part of our capital program. We also are able to leverage at a provincial level very much competitive rates, and we do that over the long term for better pricing. So certainly, I think that's always on the top of mind in terms of energy conservation and how we incorporate that into our budget. And certainly, that's something we'll be speaking with next year around our multi-year budget cycle.
Thank you, through you, Mr. Chair. I noted just because it's a 20% variance from the budgeted amount, 20% below, so it would indicate one of two things, that there was actually some significant conservation efforts, and we had a fairly predictable electricity price market for that year, so versus, say, gas, which is maybe a little bit more variable. The second was with respect to administrative costs, which were about 25% over, or 33% over budgeted amount, and so like to the tune of almost $500,000. Is that recognizing that there are going to be some programs to implement, that there's going to be probably an administrative support need in that? I guess could you talk a little bit about where that goes, if these administrative cost pressures are going to further hamper the ability to execute some of the programmatic level changes that you wish to be able to execute?
Yeah, through the chair, we can certainly follow up on more specific information, but on a high level, I would like to highlight that we did have a small surplus last year, so we were very conservative in terms of coming forward and managing the budget that we did have. Will there be a long-term implication in terms of our ability to move our strategic plans, specifically around community engagement and development? Absolutely. And I think that was one of the things that was recognized by PwC in terms of the history of how our budget was created and continued. So what we'll be looking at is exactly that over the course of the next year, is to say we have a strat plan that I think provides the right vision for our organization. Now we have to do the work on the financial side to match up and to say, what is it actually going to take, including the administration costs, the energy costs, and certainly the capital side of things as well. So.
Thank you. Yes, I'm very proud to be on the board of London Middlesex Housing on behalf of council, and I have learned in my term the importance of housing in our city, and in particular the supports that London Middlesex Housing provides, and the importance and the changes with the new strategic plan that we've just gone through, and the challenges, of course. We'll go into that funding part, but I do want to thank the delegation for the work. There's a lot of work that has gone into this, and I appreciate the committee's enthusiasm, especially from my colleague here to the right, with the information provided. And I understand that this will be, this presentation and other presentations will be going to SBBC on Monday, and I would hope that there will be some motions coming forward on changes supporting London Middlesex Housing. So I just wanted to make those comments. I also wanted to make a comment. Through this process, we've learned the importance of tenants and the tenant engagement part, and we have developed a tenant services committee on our board to work with tenants and understand that process. Those things are, we've set a high expectation for us as a housing corporation, and I know there's a lot of enthusiasm on the board to move the strategic plan forward as much as possible. So just wanted to make those comments, and I know this report will be going to council, which is on the Tuesday following SBPC on the Monday, and I hope my colleagues will read this report and the responses that London Middlesex Housing has given as we move forward with the changes. So with that, Mr. Chair, those are my comments, and again, thank you.
Anyone else? Councillor Van Holst?
Thank you. And just to follow up again on the shareholder agreements, things are changing so rapidly these days and so erratically that I think it's really important that we trust the organizations that we've charged with looking after things like our housing stock to be able to deal with that. And we need to give you the flexibility to deal with these situations. And this is for here and other places. I know that London Hydro is in a similar situation. We have these old agreements and they just don't allow us to take advantage of new opportunities. And so I see this as a theme coming up, and I hope we can really go after this, because to give you the flexibility to deal with what's happening these days will just benefit every Londoner.
And although I'll keep my comments brief because of the purview that we have, I just want to take a second to acknowledge, although they're not here, PwC for the work they've done, because I think it's brought about quite a bit of great work for us. And then also for the LMHC, the work you guys do is phenomenal. So just, I want to thank you for the work that you do, that you guys, the staff. It's such an important part for the city. So I'm just very happy that I get to even sit here and hear this. And I'm glad to hear that this is being progressed. This is a significant ask and some significant challenges. So I hope this goes well.
Okay, anything else? Councillor Hopkins?
Yeah, I'd just like to make a motion to receive the report.
Okay, we're gonna have a motion to receive the report for information. And I'll look for a seconder. We're gonna do this manually because it's not on the system. And I think that's good. I think the other thing, and Councillor Hopkins and I discussed, there's a lot of content in this report. And I know members of council and members of administration all get the audit binder, and in the audit binder was this report. And I think there's a lot of information here that would be very good context for my colleagues, all of our colleagues to have read for Monday, and we have an additional 500 pages coming at us on Friday. So perhaps we could ask the clerk to just somehow pull out the LMHC report and recirculate it electronically to members of council, because I think particularly not just to your report and the findings of this audit, but also the broader context, the appendix reports that were done in terms of the broader issue on a both more on a national scale, and the whole concept of regeneration of stock and all of those sorts of things. So I think that's a really good primer, if you will, for the pump on Monday. Michael, did you want to add something?
Sure, just a general comment following up on some of the comments that are made, and I'd like to begin by acknowledging and thanking our CEO, Josh Brown, and his team, some of whom, well, we're here, I guess, just left, because it is a substantial amount of work, and we're happy to be able to report in a way that the committee sees fit. One of the things that we had committed to do a couple of years ago in feedback from the shareholder and the city manager was to improve our reporting to the shareholder, and we've made strides in that direction and continue to. And we also want to acknowledge and thank you, this committee. I understand that there's a fair bit of content here that's beyond the purview of this particular group, but also the SPPC, the council, and the shareholder for the spirit of collaboration. So Councillor Van Holst mentioned the issue of the need for greater flexibility. Certainly when there was a downloading in 2000, 2001, and LHCs were created, like LMHC, that was a very different time. The challenges are new and they're different and they're changing. And as a result, we've looked at this really hard. It's certainly in the work that we did with PwC, but elsewhere as well. And we know that we have to be able to operate differently in order to do our work effectively. And so there is a need for that flexibility. So we appreciate that comment as well. And of course, we have to acknowledge Councillor Hopkins, who is your appointee on our board, and that's never easy to do. So you sit on our board, but then you report to the people with whom you work. So that can't be an easy thing to do. I'm sure I wouldn't be able to do it. So we acknowledge that as well. So thank you again, everyone, for the spirit of collaboration. Thank you.
Yeah, thank you. So with that, I'll call the question. All in favor? Okay, none opposed. And the only thing that hasn't changed since 2001 is that the demand outstrips the resource. And that seems to be a constant in this area. So we'll keep working on it. Thank you. We'll turn to 2017 financial audit. And in your packets, you have the financial statement and you have the audit findings on page 73. And Ms. Denbach, who's coming forward, and Mr. Collins and Ms. Barbone, 41 years, AAA, still looking good. I'll pass it over to you.
So just through the chair, I'd just like to introduce Ian Collins, who I passed the torch to present the financial statements and give an overview to the audit committee.
Thank you. Good afternoon, committee. I just want to, before I start off delving into our 2017 consolidated financial statements, I would just like to extend on behalf of the City Treasurer a thanks to the entire financial services team for their hard work and the many hours that they spent over the past couple of months in compiling the binder that you have before you. I'd also like to thank the numerous services within the corporation who put up with us over the past couple of months as we looked for them for some advice and guidance on the information that they provided us. And finally, I'd like to thank the boards and commissions for providing their financial statements to KPMG on a timely basis so that we could incorporate them into our consolidated financial statements. So the big question that we have here is, why are we here? And Section 294(1), as you may know, of the Municipal Plat indicates that for every fiscal year, a municipality shall prepare annual financial statements in accordance with generally accepted accounting principles. So in your audit committee agenda package, council and yourselves would have all received the binder which incorporates 5 key pieces of information or key sections of information. The first section, as you're accustomed to, is the Treasurer's message and financial reporting. Second section is a 5-year overview, which provides some trends since 2013 through to 2017. Following that is the consolidated financial statements. Fourthly is all the financial statements from the boards and commission that gets consolidated within our financial statements. And last but not least is the consolidated financial information return. And I just want to highlight that that last section of the financial information returns is really a cornerstone for a lot of the reporting and analysis that a lot of other agencies use when they look to compare other municipalities. You're familiar with that information coming forward before council through various benchmarking activities, such as the Municipal Benchmarking Network, which was formerly OMBI, and as well as the BMA study. A lot of the information and benchmarking that is conducted by those organizations stems from the information that is contained within the Consolidated Financial Information Return. So for today, I'm going to focus on the consolidated financial statements. And as you've seen in the past, there are 4 predominant statements that we look to. The Consolidated Statement of Financial Position, which focuses on the city's assets, financial and non-financial, and its liabilities. The Consolidated Statement of Operations, which summarizes our revenues, expenses, the surplus for the year, and the calculation of the city's accumulated surplus. Thirdly is the consolidated statement of net financial assets, which shows the changes in our net financial assets as a result of operations, identifies tangible capital asset transactions, as well as some other changes in our non-financial assets. And last but not least, we have the consolidated statement of cash flows, which summarizes the city's cash position. So let's delve into some of the highlights that we can glean from our from our statement of financial position. So the first very informative item that comes before us is the improvement that we've seen in our net financial assets. We've improved $37.4 million since 2016, which puts us at a December 31st, 2017 year-ending position of $272.5 million. Following that, our overall financial assets have increased by $81.8 million. Cash and cash equivalents have increased by $70.2 million. Our investments have decreased by $5.7 million, and our investments in our government business enterprises has increased by $7.9 million. Those investments in our government business enterprises include London Hydro, our joint ventures, and one other organization. On the liability side, you see our liabilities have increased $44.4 million. Predominantly leading to that increase is our deferred revenue, which is outlined in Note 7. That has increased $58.3 million. The bulk of that is related to our increases in our obligatory reserve funds, or as we're familiar with through budget, our development charges reserve fund. Employee benefits have increased. Our liability has increased by 5.7. Our accounts payable and our accrued liabilities have decreased since 2016 by $10 million. And we've seen a decrease in our net long-term debt of $10.5 million. We would have issued $41 million of debt in 2017. However, we had $51 million of debt that expired for the net $10.5 million. On the non-financial asset side, it's mainly comprised of our tangible capital assets as outlined in Note 14. Our net book value for these assets has increased by $135.7 million, mainly due to investments in the city's infrastructure. Some of the biggest investments that we capitalized in 2017 would be the Southeast Reservoir and Pumping Station, along with a lot of the investments that we've made in our roads infrastructure. You may note that on the statement of financial position, land is not accounted for as a tangible capital assets. It is held for resale and is recorded as an inventoried item. So when you look at the crux of it all, our accumulated surplus at the end of 2017 has increased by $166.4 million over last year. This $166.4 million includes the balances in the city's consolidated reserves and reserve funds, and it indicates our ability to provide future services. So we touched upon the tangible capital assets and what their net book value is. As in years past, just want to provide you a complete overview as indicated in Note 14 of what our historical cost was of those assets, what the impact is of amortization, and what our net book value is of $3.7 billion. What we look at moving forward and what will come to you in future reports through asset management is what the replacement value of those assets will be. And the way that we extrapolated the replacement value for this exercise was based on inflationary factors, predominantly being the non-residential building construction index and CPI. So based on the calculations that we undertook, the replacement cost value of all our assets is $12.3 billion, and the historical cost is $5.7 billion. Council will be receiving at a later date an update to the status of our asset management plan, and those numbers will be further refined at that point. Shifting gears to the statement of operations, just like to highlight some of the changes in revenues that we've seen over 2016. Overall, we had a 5.3% increase in revenues. Contributing to that was our tax revenue and user charges were up 28.8 million. Also contributing to it were our provincial government grants transfers. They increased by 30.9 million. Water and wastewater, you'll note, is appearing there, and they hadn't appeared there in previous years. The bulk of that increase was related to the Clean Water and Wastewater Fund that we recognized a portion of in 2017. And finally, we see a decrease from 2016 over developer contributions of tangible capital assets of 36.8 million. On the expense side, you'll note that our expenses increased 6.3% over 2016. The large expenditures over last year, being 2016, were found in environmental services, in water and wastewater. That increase is a one-time hit. It relates to one of the assets that we just capitalized, the Southeast Reservoir. Originally, that asset was to come into service in 2011 due to some challenges that we had with bringing that reservoir to operations. It finally became operational in 2016, 2017, so we had to take a write-down, which was close to $8 million, $10 million, which comprises 8 to 10 million of that $17 million that you see before you.
Can you just explain the write-down? Was it sort of an accelerated write-down, or is that what you mean by that? Why
Yes.
so much?
Yes, because at the time, that asset wasn't capitalized because it was still in a state of flux. It wasn't ready for service. Over the next 5 years, as we were working through some of the challenges with getting it back operationally, some of the assets that were part of that site would have deteriorated. So it was recommended that we recognize that amortization because it didn't have that same amount of useful life that it would have had it been crisp, brand new. So that was a big one-time hit that we took in 2017. Following the expenditures in environmental services, protective services.
Just a related question on environmental services. Looking at the budget number, was that an anticipated amount? Because I'm looking at the budget compared to that, and it looks fairly consistent to the budget. So was that something you were expecting? Or is there something else offsetting that figure?
Through the chair, yes, it was offsetting. So it wasn't expected that significant amount of a write-down. Moving along, as I was getting into protective services, big bulk of expenditure was seen in police and fire, predominantly in the personnel line items, which included some significant payouts for WSIB. And finally, social and family services, $11 million. Some of the key items in our operating budget that we're familiar with compared to our financial statements is that amortization is recorded as an expense on the statement of operations, whereas we don't recognize it when we budget annually. Our debt principal repayments are not expensed on our financial statements, but we do identify that as part of our budget. And finally, our contributions to reserve funds are not expensed. They fall out into the surplus position. So a slide that Audit Committee has become familiar with over the years, but just a quick run through of how the city budget differs from PSAB accounting. You can see that we both budget and look at taxation. On the city budget side, because we can't really identify developer contributions into the system, we don't budget for it, but we do identify when we take receipt of that under PSAB accounting. To bring us a total revenue, you can see the difference of $50,000 on the revenue side. Operating expenditures, relatively the same, 350. We do budget for capital expenditures. We don't identify it in PSAB accounting. However, that is offset through PSAB. We do expense amortization, which then is offset to an extent by our debt principal repayments and our transfers to reserves and reserve funds. So while you'll see that from a budget perspective, we have a balanced budget of 0 under PSAB accounting, we would have an annual surplus of $125,000. To run through quickly what that looks like and translates compared to 2017 actuals, net municipal taxation, and grant user fee and other revenues and transfers from capital and reserve funds, our total budgeted revenue at a point in time would have been $1 billion. When you apply the PSAB approach to it and look at the actuals, that increases to close to $1.2 billion for some of those items that we had discussed earlier, such as the developer contributions of $36 million, reserve funds, deferred revenues that were earned, $20 million, changes in our government business enterprise adjustments, $7.9 million, and the surpluses, the net surplus position that we're taking in from our boards and commissions to arrive at the $1.2 billion amount. On the expenditure side, much the same, operating expenses. You can see that we've included in our budget debt principal repayments, transfers to reserves and reserve funds, and the capital levy or pay-as-you-go financing to get us to that $1 billion mark. On PSAB accounting, we identify the capital expenses that weren't capitalized, the amortization expense of $135 million, and any losses or gains on disposal of capital assets, as well as our liabilities for landfill contaminated sites or employee future benefit liabilities. So I know this next slide is fairly busy, but this was an item that I wanted to take a look at to wrap my head around the city budget versus PSAB accounting. So I wanted to look at, back in April, Civic Administration reported to Corporate Services Committee and to Council that the property tax supported budget had a $6.9 million surplus. The water rate supported budget surplus was $2.2 million, and the wastewater treatment rate supported budget surplus was $3.3 million. Consolidated, we identified that overall the 2017 operating budget surplus was $12.4 million. Through the application of council-approved surplus deficit policy and resolutions of council, we transferred money into reserves and reserve funds to balance our budget at zero. So to get from that reported zero up to that to the $166.4 million amount that I identified earlier to you as part of the surplus in 2017, you look at adding and subtracting various items. You look at adding in to the zero the transfers to capital reserves and reserve funds. You look at adding back debt principal repayments. You look at adding capital program funding earned in the year. You take away capital expenses that aren't capitalized. You take away the amortization of tangible capital assets, losses on disposal of tangible capital assets, add in the reserves and reserve funds where you've earned them in the year, and you look at the government business enterprise adjustments, and you take away the impact of the contaminated site liability, the landfill liability, and future employee liability, and then you add back the boards and commission surpluses to arrive at the $166.4 million. So the big item that I'd like to highlight to committee is about the Public Sector Accounting Board and its landscape, because as you can tell, it does influence the city's finances. Public sector accounting standards continue to develop, and they improve transparency and disclosure. There have been significant changes that have already occurred and we have already achieved. Most notably, PS 3150, tangible capital assets, government transfers, tax revenue, and PS 3260, the liability for contaminated sites, which was just in the past 2 years. However, there are some exciting times ahead where attention will be required for all of those new standards that KPMG will highlight to you as part of their presentation. The big one that we need to pay some particular attention to and interest of would be the asset retirement obligation, which is not yet officially a standard, but I suspect by August it will be in full effect. Finance has already started looking at these standards and what the implications are. We have had discussions with KPMG looking at our existing processes to assess what our requirements, what the impact will be, and we've even started looking at some of the standards that are in draft. So a couple of the items that we want to discuss, which KPMG will identify to you as part of their findings report, is internal controls. We fully acknowledge that some of our internal controls can continue to be strengthened. There's further work required by us to build on our existing processes and awareness. And there are opportunities to leverage existing city initiatives to increase communication and coordination across the corporation. Some of the city initiatives that are in place would be our continuous improvement strategy, where we do take a mapping approach to looking at how information flows and where are some of the weaknesses and challenges. So where do we go from here? Next steps would be to have KPMG present their audit findings report, and then to take any questions from committee. I do want to thank on behalf of Annalisa for the work and the time invested by the KPMG partner, Katie Denbach, the manager, Deanna. But I also want to pay specific thanks to the other staff that worked on the city's audit, including HDC's and the Joint Water Board's audit, Emily Vandale, Joanne Fuller, Emmy Pellerin, Julia Vandale, Dania Nabian, Ali Sands, and Ashley Laramine. They've been at the city for some months now, and I've noticed a couple of times they'd be working on their laptops in the elevators, as well as in some instances, not too long ago, I've seen some of them working on 2 laptops at once, which was kind of surprising. With that, I'd like to turn it over to Katie. Thank you.
Thank you, Ian. And Katie and Deanna, welcome.
Thank you very much.
I always get nervous when Ian says exciting times are ahead.
He's not lying. Very exciting for us accountants. Anyways, thank you very much for having us here this afternoon. Just before we get started, I would like to reciprocate that thanks to Ian and Annalisa and their team. They're not lying when they say that our staff are out here physically for the better part. In fact, I think even over 2 months, asking questions, lots and lots of questions and requesting information. So we certainly couldn't get to you, even our audit findings report or an auditor's report, without all of their support. So I wanted to start by thanking them. So we are going to walk through our audit findings report. Deanna Baldwin is the audit manager for the City of London, and she is going to go through sort of the status report and everything, and I'll come back to chat about some of our performance improvement observations and other information that we've included in the report this year.
Perfect, thank you. So we'll just start on page 3 of the audit findings report that has been presented to you. The purpose of this report, as Katie mentioned, is just to walk you through some of the highlights of our audit findings. But please feel free to stop me and ask any questions at any point if there's anything you'd like to go into further detail on. So there haven't been any significant changes to our audit plan from the audit planning report that we presented to you some time ago. As noted in the audit plan, there are some significant financial reporting risks that we have addressed as part of our audit, and we'll get to those findings in a few pages. We'll flip you over to page 4. There are a few items that are outstanding in order for us to complete the consolidated financial statement audit, one of which is our conversation with you here today, as well as obtaining the signed representation letter, which is our evidence of approval of the financial statements. We don't expect any significant changes or any changes at all, for that matter, to the statements as a result of completing these final items, but if there are any changes, we will be sure to bring them to the committee's attention. We haven't identified any significant control deficiencies, but as Katie mentioned, we do have a few process improvement points that we'll get to later on in the report. We confirm that we are independent of the corporation, and we intend to continue to remain so, and our independence letter is included for your reference within the appendices of this report. There haven't been any significant changes to accounting policies as well to report to you. So we'll flip over to page 5. As I noted, we had identified a few significant financial reporting risks within our audit plan. And here you'll see the results of our audit procedures. There are no significant issues noted as far as we're concerned, but just to bring to your attention and as a reminder, the second risk, which is the fraud risk from management override of controls, is a presumed fraud risk. So there's nothing specific at the city that caused us to perform procedures here, but we're required to address this risk as part of each and every audit that we perform. So we'll flip over to page 6, which is a summary of some of our key areas of focus. So this by no means is a representation of all of the audit procedures that we've performed as part of our audit, but some of the higher risk areas, perhaps because there's judgment involved or estimation that and this summarizes here the procedures that we've performed. I won't go into them in too much detail because there hasn't been any change to the nature of the procedures from the audit plan that we had previously presented, but I will draw your attention to the first item, which is capital projects and acquisitions. We do have some findings to report to you later on in the report as a result of the procedures that we performed there, as well as the procedures related to payroll and employee future benefits. We do have a control observation to bring to your attention as a result of those procedures, but that's summarized later in the report. So if we flip to page 8, as we noted in our planning report, there are some critical accounting estimates that are noted in the financial statements, and here we have a summary of our audit procedures and findings over those estimates. We believe that management's process for identifying critical accounting estimates is adequate, so no significant findings there. On page 10, we just summarized the use of data and analytics in our audit. And we felt that this was important to draw to the committee's attention just because this is the way that audits are trending. So more so the use of computer-assisted audit techniques versus traditional sampling, which is what we've done in the past. And this allows us to have a more fulsome understanding of populations and data sets in order to help draw our conclusions. And you'll note that with respect to the tangible capital assets WIP amount, we have identified some findings which are discussed on page 16 as a result of our data and analytics procedures.
Deanna?
Yes.
So give me like very high level what a computer assisted audit technique is. Like, does it randomly select journal entries, or what's it looking for? How does that work?
So there's a number of applications where we use computer-assisted audit techniques. We do have access to some proprietary dashboards that we use, and it's not only for journal entry testing, and specifically at the city, we use what is called IDEA in order to test the completeness of the journal entry population. So to make sure that when we are selecting our journal entries for testing, we take a risk-based approach and apply certain criteria to make sure that the population of journal entries that we have access to is complete. So we do a full 100% roll of that data, starting with last year's trial balance, roll all of the transactions during the year, and compare to our expectation based on the final trial balance. So with respect to journal entries specifically, we use IDEA or computer-assisted audit techniques in order to help us gain assurance over the completeness of the population. Some other applications would be with some of our statistical sampling methodology that we use. So rather than haphazardly selecting a sample, using the data and analytics to pick a more representative sample, a randomized sample as well. Does that answer your question?
Is there a time savings to that? Above and beyond sort of the qualitative issues, but does it shorten the amount of time that you need to spend at the client's, does it shorten the workload, I guess is the way of saying, or is it just a more complete way of looking at it?
We find that it doesn't necessarily reduce the amount of work that we're doing. However, it does allow us to provide more quality in the work that we're doing, because specifically because we are taking a risk-based approach, we can sit down and set the criteria. Okay, what are the more high-risk transactions or potentially account combinations when you're talking specifically about journal entry testing? So we can spend our time, the same amount of time typically, focusing on the more higher risk areas rather than a completely randomized haphazard sample. Does that answer your question? Yeah. Any other questions up to this point? No? Okay. So flipping over to page 11, we do confirm that the form, arrangement, and content of the financial statements is in accordance with the financial reporting framework. And here we have, as Ian mentioned, some exciting times ahead. So we've summarized here some of the upcoming standard changes. We haven't included a lot of detail about these standard changes within this report because detail was provided within the audit planning report. And as you'll probably note, the ARO standard isn't included here because the standard is still in the works. Okay. Flipping over to page 12, just another area of focus here, summarizing the procedures that we've performed over debt issuances during the year and no audit findings there. And if I have you flip to page 13, we have not identified any misstatements that remain uncorrected. However, we have identified just one corrected misstatement, which results from a timing difference and has been summarized in Appendix 4 in the management representation letter. And again, that misstatement was corrected. Okay. Any questions to this point? Okay, and I'll turn it back over to Katie.
So after much suspense, we'll get to our findings here. Control observations, so starting on page 14, just to note, there are no significant control deficiencies that were noted as part of our audit, but we do have some performance improvement observations, starting on page 15, which go over some areas where we found differences that maybe didn't amount to differences that were greater than our audit misstatement posting threshold, which, just a reminder to the committee, was about $765,000, but potentially were driven from process issues where those amounts may accumulate to a material misstatement in the future. So we thought it would be prudent to bring them forward to management and this committee just for consideration. So the first one relates to the non-capitalization of HST. So because of the process of recording a tangible capital asset in one journal entry and the HST that's associated with it in a separate journal entry, oftentimes that HST dollar value falls below the $1,000 capitalization threshold that the city uses. So even though it is HST associated with tangible capital assets, it's not being capitalized. So the dollar amount didn't amount to a reportable difference from our perspective, but in the future it could. So just a recommendation there to review that process. The second one will probably sound familiar to everyone. It relates to payroll agency 3. So again, this is a finding that we have had in the past, and management is certainly undertaking steps to implement processes to remedy the deficiency that we've noted. But we did identify an instance where there was terminated employees who were receiving stat holiday pay beyond what they were entitled to based on their termination dates. And, sorry, I prematurely turned my page here. The third item on page 15, confirmation of unrestricted deposit balances. We did note a difference that was below our posting threshold, but still a larger number that related to funds not being confirmed at year end. So the recommendation just out there to any funds held with third party to be confirmed so that management is able to update their books and records appropriately. And on page 16, monitoring of WIP balances. So as Deanna mentioned, when we performed our data and analytic procedures over WIP balances, one of the things that we did was look for items sitting in WIP and when and how they are being transferred to projects. So there were some items that had been sitting in WIP for quite a while. So it turned out that upon further review, those items were not actively going to contribute to a tangible capital asset. And so the recommendation would be to write those off as an expense. So we recommend that management implement additional procedures just to review those WIP balances, especially if they've been sitting there for some time, to make sure that they are being expensed in a timely manner if they will not be contributing to a tangible capital asset. And so the rest of the report, it probably looks thicker than normal to you. Included in the appendix, we've included some additional information that we thought the committee might find useful. So Appendix 1 is called Financial Indicators, and what we've done here is just compile some benchmarking information for the committee. I will say in your reports that page 8 of this appendix has been updated, and I've provided Barb with updated hard copies of that one page. Just the slide was a duplicate, so we've got the correct information in there now. But really what this document is meant to do is just pull together some information to generate some discussion amongst the committee. We recognize, obviously, it's not our place to dictate policy, so this is really meant to generate conversation and to provide a sideways glance to some comparator municipalities. And what we've done is taken information that's publicly available from the financial information returns for 2016, because the 2017 information is not yet available. And we've done some analysis on specific financial indicators that are recommended by the Public Sector Accounting Standards Board to be considered by any public sector organization as they relate to either the sustainability, the flexibility, or the vulnerability of an organization. So we've compiled our findings here. A couple of things to note. This is meant to be, it's a point-in-time analysis, so what may be useful, if the committee finds this useful going forward, is to add some year-over-year comparators as well. And the other thing I would note is just to exercise a bit of caution when looking at this in order to not draw inappropriate conclusions where these indicators are being measured on a corporate-wide level. So there may be specific areas that you might want to dig into, but obviously not meant to draw conclusions about the city's operations as a whole. So I don't plan on going through each of the indicators one by one, but if people do have questions about this appendix or anything contained within it, I would be happy to answer those.
Thank you. I did look through the indicators and was kind of irked that Windsor seemed to be outdoing us at almost every turn. Have you any comments on how that happened?
Unfortunately not. It's difficult without knowing operationally what is happening in Windsor versus what is happening in London to draw a lot of conclusions on that. I'm not sure if management has anything to add.
Through the chair, I don't have any specific comments on specifically Windsor because I haven't looked and analyzed their financial statements. But what I can say is we do have regular conversations with some of the other regional treasurers, and their circumstances are quite different in a lot of ways. But at the same time, when you look at some of them, we have some really strong reserve funds. They do have a little bit of lower debt, but again, very, very different type of city because of its location. So from a population perspective, it's a little bit more comparable, but given some of the grants and other pieces, it is a little different just because of its location, I might add. So that's really one of the only insights I have in terms of trying to draw some of the comparisons without actually looking at their financial statements in their entirety. But I think just to bring on an overall, when you look at some of these, I would say a lot of them are very similar to some of the indicators you would have seen through our AAA credit rating report, where Moody's has gone through and done a very similar type of analysis just on our strength. But I think a lot of them, as you look at our sustainability, and particularly the flexibility and vulnerability, really show some of the strength that London itself does bring, notwithstanding some of those comparators to our AAA credit rating.
Thank you. And I also noticed that at the end, their operating grants and capital grants as a percentage of revenues and expenditures respectively are also substantially more than ours. So it's 25% more grants in terms of revenues and our operating grants, and almost 4 times as many, or 4 times as much a percent of capital grants. Could you comment on those two? So this is page 15 and 16 of the report, or 105 and 106 of our agenda. But those seem to be significant amounts. And I'm wondering how they might be doing so well picking up grants. I might be able to guess, but maybe you have more reliable information.
Ms. Denbach or Ms. Barbone?
Through you, Mr. Chair. The one thing I will say, because this is a point-in-time analysis, so this is only showing you the fiscal 2016 year results. So what might be more useful is to see over, a period of 5-10 years, because I suspect depending on what type of capital projects are being undertaken by each municipality and when that funding is received, that these numbers will probably swing fairly significantly.
Stephen?
Thank you very much. I did, actually, it lines up fairly nicely with Mr. Collins' presentation. He went through a table of net book value of assets, and one of the financial indicators, net book value of assets, TCAs as a percentage of historical cost of TCAs. And so as I was looking at that one, I was kind of doing the math and found that that we were at 65%, and the bar is 65%, and my question, in my head, was about finding ourselves what was the right number for it, because it kind of indicates the amount of consumption of your TCAs and how much renewal you're having. So like 50% is just right on the line of renewal and replacement of your assets. What are we aiming for? Like, where do we want to see? What puts us in a good position? I'd imagine if we're really high, then we might be refreshing our assets too quickly. If we're too low, then we see an infrastructure gap or just an asset gap in general. So, where do we want to sit?
With what the municipal governments and other governments that are facing, and you've heard a number of times about the infrastructure gap, when I look at the financial statements and try to figure out what is that right spot, I kind of look at what the net book value is and how much money is being depreciated each year, and I compare it to how much money we're setting aside in our reserve funds to kind of see whether or not that is a fair amount of money that we are setting aside for the eventual replacement or improvement of that asset. My concern is that when we look at the replacement value, that shows a bigger gap, because we're basing it on what we paid for an asset 5, 10, 20 years ago. So given that our amortization rate, or the expenditures that were occurring to date on that versus how much we're setting aside in the reserve funds, I would suggest that we should try to at least cover our amortization expense. I don't believe we are doing that quite as yet. However, we do have our corporate asset management team who will be bringing forward in 2019 an update to our asset management plan to see where we're at, because council has made investments in addressing that infrastructure gap. And you've seen that with the amount of investments the city has made and in our additions to our capital assets. And when you factor in growth and the impact that growth has had on our assets and the additions that they've made, it's a bigger discussion, hence a corporate asset management division, looking at the program and the provincial regulations that are now encouraging municipalities to develop an asset management plan.
And thank you through you, Mr. Chair. And just as a follow-up, then those TCAs themselves are kind of liquidatable assets, not necessarily like a road infrastructure, but more perhaps a fleet or buildings, computers, those kind of things, right?
Just, a comment on separating, like, we've got almost 3 presentations here. The first 2 are very connected, and then your appendices on financial indicators. One of the things that I find with KPMG being our auditor is, we don't hear from you a lot throughout the course of the year. Work's happening, we get your audit plan and all that sort of thing. And we may want to think about, because this is interesting stuff, and I think its limitations, Councillor Van Holst has hit on its limitations, because, you never know what they're doing, and I actually disagree with his analysis. I think we're smoking Windsor on a number of indicators. So I don't necessarily, it's all how you play with it on terms of percentage of assets, or how much of your capital is coming from grants, which means if the grant goes away, you're in trouble. How much reserve, like if you look at our reserve situations, those sorts of things. So it's a complex mix, and you're never going to be at the top of the heap on everything, but it may be something to think about in future years, that because you'll have the 2017 sometime late in the year, that it actually comes back with the audit plan at another, because the audit plan is pretty perfunctory. We've been doing this thing with the same sort of rhythm to the dance for many, many years, and that it somehow disconnects it. So it sort of helps us before we start audit to think about what's the horizon, and some of those questions that are rightly raised are in that context rather than connected to a very, if we started to go line by line through this, we'd be here until next year's audit's due. But there may be some value to doing that, and somehow even it obviously connects to the benchmarking stuff that tends to come through corporate services. And so just I'm going to leave that. There's no motion, but to think about how do we leverage the committee and the report out and providing that scoping. And I see this sort of thing more in the scoping range, and us aware of how we're doing. We have a number of those opportunities throughout the year, and we see them, the Moody's report being one, obviously, and then the benchmarking reports. So how do we do that? And that could be a conversation, Katie, you and your team could have with Annalisa and her team. So what makes the most sense?
Yep. Yep, absolutely.
Any other questions on staff's presentation, KPMG's presentation? Councillor Hopkins.
Thank you, Mr. Chair, and I appreciate your comments that you just made as well. I do have a quick question on the financial statement. I guess, Mr. Collins, first of all, thank you for the presentation and the user friendliness of the presentation. The question is around asset retirement obligation, and I appreciate that you've already started the discussions with KPMG and looking at existing processes. My question is, when, as a committee, will we be updated, and how will we be sort of part of knowing what's going on in this area of concern?
Our expectation is that the asset retirement obligation standard will be released in August. And based on that standard, we will be then assessing where current processes are and where attention is needed. One of the big items that has caught my attention is that the asset retirement obligation, it builds upon our existing processes, mainly the capturing of our tangible capital assets. And as you've seen through some of the observations that KPMG has made, there are opportunities there for us to tighten and strengthen the tangible capital asset process. So I know based on discussions that were had last year, we are looking at the tangible capital asset process right now and looking at how we can better prepare for addressing the asset retirement obligation when the standard is made official. We do have some time to get the accounting for the retirement obligation in place, but there will be analysis needed, not just by the finance team, but also through engineering, facilities, water, wastewater, and some discussion will be needed with our legal area to see how best to capture and identify those obligations. So to answer your question, Councillor, as more information becomes known to Civic Administration, we will be reporting back through corporate services. Also, probably as part of the audit planning, we will identify some of the opportunities that there are to address that. And depending on what is required to facilitate the reporting of that, if there are budgetary implications, it would be coming forward as part of the next multi-year budget plan.
Thank you for that explanation. It's good to know that there are going to be other opportunities, not just through audit committee, that we're alerted to this ongoing process, and just want to thank both of you for your presentation. Very much appreciated.
I think Councillor Turner and then.
Thank you very much. Through you, Mr. Chair, just to kind of pick up on the asset retirement obligations, imagine right now we currently have processes in place to address those obligations as they come up. This is in, let's say we retired a stormwater management facility or a sewage treatment plant or something like that, and we wound it down. We know what those obligations are in the current day. Is this accounting to anticipate for those costs at the outset of the project, to add new budgeting for it as a liability on our books going forward? And this is more an accounting exercise, or do we anticipate this might have significant budgetary impacts for us in terms of funding at the outset?
From my understanding of the draft standard, it is very much an accounting exercise, but it's also taking the opportunity to rather be reactive to when we actually have to look at retiring an asset. We'd be preparing for that retirement well in advance. And that way, it goes back to transparency and disclosure of when we recognize an asset on our books, is there a retirement obligation? And that it's identified for the community and to committee that there is an obligation, that there is a liability out there for owning this asset.
Thank you, and through you, Mr. Chair, so that could include something like setting up reserves at the outset for its retirement or something along those lines.
That would be a consideration that council would need to look at.
Okay, thank you. Moving on, with respect to the statement of operations on expenses, we had that 6.3% increase over 2016. Obviously, our budget didn't increase by 6.3%. I'd imagine a fair proportion of that was either funded by one of two sources, one through contingency reserves, the second potentially through transfers. Do we know how that kind of shook out?
Through the chair to the committee, the 6% increase, a portion of it would have been through your municipal taxes, 3%, plus you have the assessment growth dollar amount, so that would add about 1%, so you're at 4%. And then the councillor is correct that there are other transfers, other sources of revenue, grants that come into play. The city did take on some additional funding for some of the social services, childcare, in 2017, which was pretty much just a flow through. We recognized the revenue and then we spend it out dollar for dollar, 100%. So that increases the revenue side as well as the expenditure side.
But just a reminder, that write-down on the Southeast Reservoir would be part of those expenses too. So that's probably, what was that, $8
million, yes.
So that's a pretty significant chunk as well.
Thank you. I have a few questions on the notes. Note number 3, I noticed our allowance for doubtful accounts went up as a percent. Maybe I just comment on that.
Through the chair to committee, the allowance for doubtful accounts predominantly would be comprised of items such as allowances for tax. And as the Corporate Services Committee heard just yesterday, when it comes to assessment appeals with MPAC, they do take some time. So we are very we're trying to be on top of recognizing that when an appeal's in place and if there is a likelihood that the appeal will go in the not in the favor of the city, that we do start setting aside some money. So we do identify that in some instances there'll be some amounts of money that will not be collected.
Okay, thank you. That's an interesting answer. For most businesses, this is just a matter of people who won't pay, but we're actually factoring the fact that they shouldn't be charged as well, or there's an error there. So that's interesting. Thank you. And then on page 51, where am I? Note 12, under C, we're talking about on page 51, liability for vacation credits. Are we talking, is that the RMO, the recognized management overtime, or specifically, or is there other things in here as well?
Through the chair, that is specifically the vacation accrual balances that are outstanding in people's banks that would be due and payable upon, we would have to extinguish that liability. So that is vacation that is in people's banks that they are entitled to either in time or in payout.
Okay. Thank you. Note 14 on page 54, looking at disposals of water infrastructure and wastewater infrastructure, what are we usually what are we disposing of there? If I heard that we were disposing of wastewater infrastructure, I don't know that I would want to bid on it, but I'm not sure what that exactly is.
When it comes to disposals on the financial statements, it relates to, from an accounting standpoint, if the asset is disposed of before its useful life. So often an asset may not live or have as much of an economic benefit life that we had anticipated. So sometimes we dispose of some of those assets at the time, and they may not last as long as we accounted for.
Okay, so we may be replacing something before we expect it, and then that takes the place of the amortization that would have happened. Is that right? Okay, thank you. All right. I noticed in 18 on page 58, contractual obligations, there's a lot more for equipment lease payments. Will that go up, and is that just because we're in the current year? This is nothing special about 2018, but it's just the fact that it's closer to the present? So that, yeah, I'm sorry, the number 19.5 million is substantially higher than our future years. That's just because we haven't made those contracts yet, or was there something about 2018 that would make that number large?
Through the chair to committee, probably about 2 years ago, we changed the manner in which we are procuring our computers and moving off from a lease basis to acquisition basis for the city. So as we were transitioning out of the leases, you will see a big drop, and exactly what you are seeing is part of that drop, that we are now getting out of a lot of the computer leases that we currently have and moving to acquisition. So that's why you see that big drop from 2018 down to 2019.
Okay, thank you, that's great. And I guess the last or second last thing I had was just looking at the operating revenues. It seems that with very few exceptions, revenues are up in every area. That seems encouraging. The only other comment was I was going to make, maybe at the outset, was say, you know, looking at this reports, I hope that we would restructure the entire first page so there'd be a larger picture of the city treasurer. But that was my final comment. Thank you very much. There's a tremendous amount of work goes into here. I won't have comments on the specific one. I did that last year, looking at all the individual things, but our concern here is mostly the consolidated returns, and things look pretty good for the City of London, so thank you for everyone's work.
So, as I've gotten to know our city treasurer over the last 10 years or so, she would be much more comfortable with a group picture of all of her staff, and that's to her credit. So, thanks for embarrassing her. Oh, sorry, Councillor Helmer. The deputy clerk failed to poke me.
I just put my hand up, so that was very fast. I just had two questions. The first one's on page 50. It's under post-employment and post-retirement benefits. The range for healthcare cost increases has been changed from 4 to 7%, down from 4 to 8%, and that's not something I usually would see, a decrease in the upper end of healthcare cost increases. So I wonder if you could just speak to that.
The change that we're seeing in that range is based on when we consolidated with our boards and commissions. Some of the boards have indicated that they've seen their healthcare cost increases not as high as they had anticipated. So it's come down a bit.
Yeah, next one's on page 63. There's two questions there. The one is about the payments in lieu of taxes line. We don't talk about this very often. And it's quite flat. It's not really increasing very much. I know that the actual heads and beds amount has been capped at $75 for quite some time, I think going back to the 80s. And I wonder if there's been any prospect of that ever changing, even going up by inflation, for example.
Through the chair, your timing on that is quite impeccable, because we have been talking about that, and through our regional treasurers group, that has been flagged by a number of municipalities that this is a problem. And we literally just last month met to talk about how we might, as across province, they did a bit of a survey to see, and it appears that a large number of municipalities are supportive to see some sort of an increase and are trying to come together to put that forward, to lobby for a bit of an increase, to bring it up to a level that would be at least show some prospect of inflation or an annual, some sort of inflationary increase. So we have brought that forward, and we are trying on a regional basis to try to look and have discussions with the province to approach that very subject. So I don't have any further information, but we are certainly trying, because it has not gone up in a long, long time, and it is something that we have flagged that it probably would be prudent to try to have that conversation now.
Well, I'm glad to hear that. As a combination of extremely heavy medical operations with hospitals, the heads and beds applies to hospitals as well as post-secondary institutions, and then a big university and college town. Obviously the impact for London would be quite significant even compared to other municipalities. So I'm glad we're looking at that. In terms of the other revenue, I think I always ask about this. Are there any changes in other revenue that are any kind of concern? I know that it's kind of lumpy, and sometimes there's a bunch of sales of things and sometimes there's not. But I did see that the other contributions to operating is down fairly significantly, and I just wonder if that's anything we need to be keeping an eye on.
Through the chair, there's nothing unusual in there. I mean, because it's other, it tends to be things that are more unusual that occur and aren't really consistent from year to year. So I believe last year, and I'm going off the top of my head, there was a couple of things that I think had raised that a little bit higher than it would on a normal basis if you look across the 5 years. So there's nothing there that's of concern, and certainly nothing lower than what we would anticipate. So we're not flagging any concerns on that one.
Okay, thank you. That's it for questions. And I just want to make a couple of comments. I think the 5-year financial review is a really good part of the overall report. And I just wanted to make a few comments about it because it's such a important part of the overall financial performance of the organization. So we've gone from a situation back in 2005 where we had less in reserves and reserve funds than we did in long-term debt. So we had about 68 cents of reserves for every dollar we had in debt back in 2005. Now we have $3.20, which, that's not really that long period of time, 12 years, to make a change that big. We're almost $1 billion now in reserves, reserve funds, either discretionary or obligatory. And even a few years ago, it was nowhere near that level. And I think that the financial discipline and the plan that we've been executing very well from a financial perspective is really paying off. We're paying less in interest, not just because rates are low, but because we've been not using debt to finance capital infrastructure replacement. Those things put pressure on the tax rate, and certainly we've been dealing with that in our multi-year budget, and it's not as though it's going away as a pressure on the tax levy. But it is providing us with a lot of independence, as Councillor Deputy Mayor Hubert was talking about. Having this own source revenue and having a good financial position, it allows us to withstand some shocks if they come. And in 2009, that was the lowest point we had for long-term debt. The recession hit, and of course the debt started to increase because we had to do a number of things. But in terms of like per capita numbers, we're doing extremely well on all these fronts. Reserves per capita are going up, debt per capita is going down, and those are really important in the long run for the organization and for the city. And I just wanted to spend a little bit of time talking about it because this is where you see it kind of summarized, and you can look back over time to see just how much has changed. I really appreciate the presentation too in terms of reconciling the budget to PSAB. That is a tricky thing that every time I talk to people about the municipal budget and they want to talk about it as though it's a business corporation, it is tricky to explain how it's all different and why when they look at one report, it'll give you a totally different number than if you look at the others. And I thought Mr. Collins, you did a very good job of explaining something that's pretty complicated very clearly. And I'm going to point people to the presentation so they can go watch the video.
Okay, can I take a motion on all of the above? That's Councillor Turner, seconded by Councillor Van Holst. I'm going to call the question, and I want to make a comment after I call the question. Call the question, all in favor? Any opposed? Thank you. So my comment is this, and thank you for the for teeing up my comments, Councillor Helmer. One of the things that I look at, and I came on to council in 2006, so just after that 2005 number, is the solidity. And I really like the three, the sustainability, flexibility, vulnerability. Like I think, that's a really good 3-word matrix to look at the health of this organization. And so I want to extend my thanks from the chair, and also my personal thanks for the fact that we have a really, really well-run, financially sound organization. And it's a team. It's our folks from Deloitte. It's the folks that preceded them from PwC. It's KPMG. It was Ian before Katie. And it's a really well-run team. And to Annalisa and Ian and Sharon and all the rest behind, and the legion that aren't sitting in the room, because I know there's a legion. We're probably all watching on their computers right now. Thank you very much for a really good audit, but also for giving us the financial flexibility to not have our backs against the proverbial wall, to be able to create services and make decisions that allow us to deliver a great municipal product in all of its permutations and faces to the citizens of London. And so from a financial point of view, I'm absolutely delighted with this audit. I think the indicators is a really good conversation to have. And you know, we are really seeing some good work. Deanna, thank you to your team as well. Well done. And so I will probably echo these comments when we see this at council, but to all of your team, please extend to them our thanks and gratitude for the good work and for the city that we get to enjoy, because, you know, things get done because there's money in the bank to get it done. So thank you very much. We'll go on to page 127 of the agenda, and which is the addendum report to the building permit review. Thank you for this, and I'm not sure, Peter or Angelo, who's going to talk to this today.
Thank you, Mr. Chair. We last met on February 7th, and Deloitte presented to you their findings of their audit report. And as a result of that, there was some additional information requested by Civic Administration to provide further details on our action plans. And we have attempted to do this in this addendum report. You will recall at that time that there were 3 medium priority action items identified and 1 low priority. And with your indulgence, I'm not sure how you like to handle this, Mr. Chair, whether you want me to go through each item individually or you simply want to ask questions. And
shocking as it may seem, I did read the report. And I'm going to assume that my colleagues did as well. So rather than walking through them one by one, I'll look for more of a Q&A. So if there's questions on it, I want to thank you and your staff for really digging in and taking those findings seriously and figuring out how do we improve this processes and ensure that the risks are covered off as well. So let me turn to, if that's okay, I think Councillor Hopkins, I'll turn to committee member. Let's start with you, Councillor Hopkins.
Thank you, Mr. Chair, and I'd be happy to move this report. I'm glad to hear that management, I assume, is in agreement with these findings, and glad that we've made some improvements. So happy to move the motion.
Okay. Was there any questions on the report, Councillor Van Holst?
Thank you. Just when do we expect the ITSC review and prioritization process to be completed? That seems to be dictating when some of these will be finished.
so through the chair, part of the improvements, if not almost all of these improvements, involve our folks from ITS. And at this point, I have to acknowledge their full support as with respect to what we've planned here in terms of the action plans. It's in some cases, it's not a minor task. And specifically when we have a list of items that we are looking at to improve, some of them are intertwined with other processes in the overall building permit issuance process, if you will. And what we've adopted the term building folder project. And by that, what I mean is any small tweak that we want, we've put that in this larger project because we don't want to make an improvement in one area only to find out that a second improvement is going to affect the first one, and then we have to go backwards and backtrack. So we heavily rely on their support, and that's why we're collaborating with them to be able to provide this action plan in the most efficient manner.
Yes, thank you. The automation is that we're looking at is a really great idea. That slows things down. I know that London Hydro implemented some of that project working with you, and it's been really cut down tremendously on from 17 days to 5 days to get things turned around. So that's fantastic. Keeps people working and keeps the machine grinding out houses and things so we can live in them. Thank you.
Councillor Turner.
Just really quickly through you, Mr. Chair, I noticed that timing for completion of continuous education is December 2019. Is that to actually have everything up and running, or I'd imagine around now leading into some of those opportunities when investigating budget requirements for the 2019 budget itself, that now would kind of be the time to identify some of those at least early opportunities.
And through the chair, I'd like to acknowledge also Angela DeSico, who is here with me this afternoon, Manager Plans Examination, and that's one of the questions I'll defer to him to answer.
Thanks, through the chair. We've had a couple of meetings now with Fanshawe College, as well as the Southwest chapter of the Ontario Building Officials Association, trying to structure something where really London kind of becomes the leader in driving the education for building officials around the area. So we're working with Fanshawe to try and set up a specific program where we can offer the building code courses that we need, but also surrounding municipalities will need as well. That way we can get more uptake and more people, which will help to drive down the cost. So that's the reason we have it targeted out at that point, because it's not a fast process to get these up and running through Fanshawe. So right now we're trying to get facilitators and that as well lined up and trying to establish a framework of how we want to move forward with presenting these courses. Also, we're just polling our staff through our yearly performance reviews, saying, you know, where do you feel we need to focus our training and develop our program in that fashion as well.
And through you, Mr. Chair, a quick follow-up then. I imagine in your network of building inspectors and officials across the province and within the region, is there appetite from others to be able to travel to London or to Fanshawe or wherever Fanshawe is making the offerings to be able to leverage that?
Yes, through the chair there is. We ran a program on septic systems earlier this year, which we held at our Exeter Road Operations Center, a good facility out there. So there is the appetite there for those smaller 1- and 2-day courses, and that's really what we're trying to structure here. Unfortunately, the only training that's really offered now is a full 5-day program in Toronto. So that's a lot of time and money to send someone away, put them up in a hotel for 5 days. So we're looking at breaking it up into little smaller chunks over 2 or 3 days, and possibly including evening courses as well, just to try to accommodate everybody's schedule and needs.
Very good. Thank you very much.
Thank you. Good questions. Anything else? I'll look for a motion to receive this. Councillor Hopkins, and seconded by Councillor Van Holst. Thank you very much. I'll call the question. All in favor? Carried. Thank you, guys. Well done. Management compensation process assessment, 149. And finally, we're getting to internal audit. How about that? Thanks for your patience today. Jim and Anissa.
We just wanted to ask what approach you'd like to take with this report. I can walk you through it in detail, or if you like, we can go straight to questions.
Can you give us some high level on this one? Just in terms of what the, the basic findings were?
Sure. So in regards to management compensation, the scope of this review in particular was to look at the practices surrounding the review of data and the input of that data into the management compensation system, as well as to evaluate the processes and controls to ensure the ongoing integrity of the data. So within this review, we identified 3 medium priority observations, and they are starting on page 5. The first one being around the payroll liability account reconciliation. So we did identify that there were defined processes to be able to complete reconciliations, although in regards to the payroll liability account, it was only performed on an annual basis. And our recommendation is that for this particular account, it would be more beneficial for it to be completed on a more frequent basis, be it more quarterly or monthly. Management agreed with the recommendation and indicated that they would implement that moving forward. The other observation was around temporary off-cycle acting pay compensation increases. So at times within the city, employees may receive off-cycle pay, and that would just be a result of if it falls outside their standard grid. An example of that would be if an employee temporarily takes on additional duties. What we had identified was that there wasn't an end date within the system for that particular item. So the recommendation is that to enhance this particular process, that they should be looking to ensure that there is an expected end date, so they're aware that, of that going forward. Management agreed as well, and they indicated that they would implement that accordingly.
Okay. I'm sorry, Michael, go ahead.
Thank you. So that's in with the J.D. Edwards. Is this just a matter of indicating that the end date is a mandatory field? Is it going to be as simple a solution as that?
Through the chair, that is in field we will be looking to put into J.D. Edwards so we can automate that.
Okay, so the field wasn't even there at all. Is that the case?
Through the chair, that's correct.
Do we have any idea how the extent to which we might have been paying people more than they should have, or how long some of these payments might have gone on?
Based on the testing that we had done and the samples that we had looked at, we didn't identify any particular items that went over a period of time. Finally, the third observation was around management compensation documentation. So here we identified that there is criteria and there is documentation. It just needs to be more formalized. And the recommendation was that management should work to revise and formalize the documentation and the practices and to be able to roll that out accordingly. Again, management agreed with the recommendation and are working towards updating their documentation.
Okay, thank you. Any comment from administration, from the back row? Such an agreeable bunch up there in HR. Okay, any other questions? Councillor Hopkins.
Yes, thank you. I just have a quick question on the reconciliation. I heard that you are recommending, instead of doing it annually, doing it quarterly or monthly. Is there, and obviously in the report, it does encourage doing it on more of a frequent basis. So is there any benefit in going monthly to quarterly? Any recommendations there, or will it be just up to staff?
From our conversations with management, I think in this regards too, it depends on the availability of management to be able to complete it and ensuring that there is sufficient segregation of duties. Typically, we would see this type of reconciliation being done monthly, but as long as it's being done quarterly and there's a set of eyes on it, that would be sufficient as well, because at least they'll be looking at it 4 times a year.
It's nice to know we're going to make some improvements there to do it more frequent. Thank you.
Michael?
Sure, these aren't huge tweaks, so just this gives me quite a good deal of confidence in what's happening when, you know, we're just looking at really fine tuning things as opposed to some gaping error, right? So something big. So that's great. So excellent job to staff too. That this has gone well.
Okay, anything else? Motion, please, to receive this report. Councillor Turner and Sumit, and receive and implement, I guess, the recommendations. I'll call the question. All in favor? Thank you very much. Okay. Price, do you want us to walk us through the next, or Anissa, are you going to walk us through the next piece?
Sure. Would you like to walk through the parking revenue generation report or the other summary information of internal
Yeah,
audit?
we can do parking and then come back to the audit summary, okay? That's a good idea.
So in regards to the parking report, the purpose and objective and the scope of this review that we had agreed with management upon was to review the processes and controls in place to manage the parking services cash transactions, their cash deposits, as well as cash reconciliations. We were also looking at the processes to monitor cash handling for parking services, as well as looking at their budgeting and strategic prioritization processes. In regards to this report, there were 2 high priority observations and 3 medium priority observations. So the high priority starts on page 5. The first observation is in regards to the parking services strategy. So we did identify that parking services has a business plan in place, but beyond the recent development of what is occurring within the downtown parking strategy, what we're recommending is that management should look to formally document and articulate what their strategy is, as well as be able to look at metrics around measuring to be able to ensure that they're meeting the strategy. So the recommendation here is really for management to work with other senior leadership team and with council as well to be able to identify what the parking strategy should be going forward and what the requirements are. Management recognizes that there is a need to adopt a formal strategy, and they have a plan in place to be able to look at moving forward with activities to do that. Okay. The second observation is around parking services risk inventory. So we were not able to identify any formal documentation to demonstrate that parking services has identified and defined their risks within this particular area. This observation came about as well because as we work with other municipalities and local governments, this is an area that many of them are moving towards in terms of identifying risks and building it within their strategies. So the recommendation here is as management looks to implement their strategy, they would also look to identify the risks and be able to come up with mitigation strategies. Management recognizes this recommendation, and as they work through observation 1, they'll look at identifying the risks as well.
Thank you. And regarding this, you said other municipalities are looking at this. Are they specifically looking at parking risks? And what I'm asking is staff going to be able to plagiarize their risks? They can't be very different from city to city. So somebody else, do you know of other municipalities that have done this work specifically on parking?
Across many local governments are looking at identifying what the parking strategy should be for these particular areas. I think majority of them are looking at identifying those risks. I don't think you can plagiarize them in any way. They have to be very specific to the municipality and what's currently occurring as well too. I wouldn't necessarily say there's a lot of published material on it as of yet, but it's something that as you work through your strategy, identifying the what can go wrongs and what emerging risks are is more important to be identified to your particular government.
Excuse me, could we please not use the word plagiarize? Okay, that has significant implications for professionalism and violations of professional codes of conduct. And so if we could use learn from or look for best practices, that would be more acceptable language, if you please. Sorry. It's one of those things that the hairs literally on the back of my neck go up when that word is used in a professional context.
Thank you, Mr. Chair. I'll quote you rather than in the future, yeah, if you like.
Having said that, imitation is sometimes the greatest form of flattery, so. Carry on.
Okay, the third observation is around customer service monitoring. Here we identified that there wasn't a formal mechanism to solicit feedback from customers with respect to parking-related service offerings. So here the recommendation is just asking management to consider formalizing the intake of customer service feedback in relation to the various parking service offerings. Management recognizes this recommendation and they have a plan in place to move forward.
Go ahead.
Just really quickly on that one, this one is a challenge, I think, even amongst my staff. I have several enforcement personnel, and we've been looking at strategies across our organization for those seeking service versus those who are receiving mandated services, kind of the euphemistic way of putting that. But I see it as really important to try and figure out how we are meeting client needs, even in those mandated service recipients. How did the experience in general go? Were there learnings associated? Did the personnel take the time to explain? Was it well understood? Did they take the time to listen? Recognizing, of course, that the interaction is generally perceived as negative to the client when they're on the receiving end of something like parking services. But I think this is a really key area for us to be able to move forward. So that I think as counselors we receive quite a few interactions with respect to parking services. We recognize very much that that our staff are working very hard to provide a service to the community and to the city, and there's trying to get that balance so that we can point back and say, look, our personnel are doing an amazing job here. So that's a helpful point. So I'm glad it was identified here too. Thank you.
Can I just jump in on that one a little bit? Because I was thinking about the challenge, because I kind of like survey and data work. And, you know, this morning, just for example, I had a 7 o'clock meeting at the Doubletree, and I tried to pay using Honk, and it wouldn't let me pay because it's free parking until 8 o'clock in the morning. And we had a report just the last cycle on the revenues and all of that. And so I go, well, thank you very much for not taking my money. I would have given you $2 or whatever it was. So I think even with the honk, because you get a text that says your parking is about to expire, that there's an opportunity to tag to and incentivize, you'll get, I don't know, free parking out on Clark Road or something. I don't know what it would be, but some sort of incentive to respond to a very quick survey. And that's, I think, where the report talks about targeting something very narrow. I have to tell you that I was out in the Old East Village, and the parking lot behind what is now the Old East Village Grocer, which was a real problem. You'll remember, Orst, I think it was before you were on the file. I actually went up and Jay and I have had this conversation and took a whole pickup truck of garbage out of that parking lot once upon a time, about 5 years ago. And because there was a special event happening. It's beautiful. The redesign of it is absolutely beautiful, and you feel like it's really well done. The mole arts are there for the like it's really well done. And I was just reflecting on how different it is from what it was even 3 years ago. And, I don't know what the revenue is on the lot, but it's a significant addition to what we're trying to do in the Old East Village. And so there has to be a way to tackle that sort of customer service. Do you feel safe in our parking lots? What could we do? Those are where we talk about some of the lens, the gender lens and some of those sorts of things. How do we, so I think that's something to, sort of think about a little bit, and we can work on that. So thanks for flagging that, but yeah, Councillor Hopkins.
Thank you, Mr. Chair. If I can tag along as well, I really appreciate, Councillor, or both your comments regarding that customer service part of it. And if you are looking for feedback, I'd welcome you to reach out to councillors. And, I think we tend to receive a lot of information on how the community is reacting to our parking services downtown in particular, but throughout the city. I do have a question, a little bit different. Given that we now are able to take in personal information, is there a concern or a risk on how we use that information and how we apply it? Or is this done through this process at all, through, you know, the audit process about how we take personal information that we can get from our customers and what we do with it? Just a question.
In terms of the privacy and personal information, it wasn't something that was covered in this particular audit, but there are the rules and regulations that should be followed. So I'm sure as management works towards looking at what those feedback mechanisms will be, they'll look to those regulations as well.
Thank you for that. I think that would be important, just given our chair's comments about using the honk application and how that all works. So I just wanted to make that comment.
Thank you. You have more findings here. Have folks had a chance, I mean, we've covered the high level ones. Have folks had a chance to take a look at them, and is there any questions on them? We'll go that way on the balance of them. And then I am going to ask our staff to comment on the process and how they see this rolling out. And I have to say that the one word I hear over and over and over again is, and noting that our focus of this audit engagement is really different. Document. It's almost like a second language for you, Anissa. You know, it's looking for that documentation and controls in place. Jim?
I was just going to make a comment that the first three comments talk to having a strategy and having risk assessment and assessing customer service and performance. I'm sure management does that now on an ad hoc basis. Again, it's just not documented. And I think documenting that as part of a strategy and a risk assessment allows you to share it with, like, council in this case, and so you have a better understanding of the strategy overall. So I think that'll be important.
Do you want to comment on this just a little bit?
Sure, through the chair. We definitely enjoyed the experience of working with Deloitte. They were wonderful people that we spent some great time with, and it actually really helped us to think about how we're doing our business. We do obviously do a lot of process management. We feel we're, you know, balancing the city's assets and revenue in a very accountable way. We do agree also that some of those procedures could be better documented. For the old idea that if we all got hit with a bus, we want to make sure that other people that we're going to take over, it's very clear what you need to do. So we're confident that we are managing in a very good way, but we also do appreciate their observations and their reasoning for why we would want to make sure that these documents are available and kept up to date, and making sure that we're doing everything efficiently. With regards to some of the feedback on the customer service, we agree it is a difficult, you know, assessment to do with parking enforcement. All the colleagues that I have spoke with across Ontario, Canada, and internationally say, you know, you got to really, the way you're going to initiate that feedback has to be careful, because otherwise it can be a very, could be discerning to the staff if all they're going to hear is, you know, how horrible we all are. But there's other ways I think that we can look at it, engage customer feedback. We've spent a lot of time in the last year and a bit rebranding it. You'll notice that we I don't use the word parking enforcement unless I absolutely have to. It's parking services. Enforcement is one piece of what we do. What our real priority is to manage a number of services within parking, and it includes enforcement when things are not in compliance. We have really been spending a lot of time training staff in that approach, and will continue doing so under our rebranding. Again, as far as the other items that have been noted, we agree that while we do believe everything is there's nothing that we're doing that's wrong, we could be doing things better. So we really do appreciate the feedback. We actually have a new specialist position that's going to be filled probably sooner. We had noted September, but actually the person will probably be on staff sooner. That will help us with some of that work of putting together the strategies, making sure that we have metrics in place, targets to meet the metrics. And again, we will look at best practices across Ontario and other jurisdictions. So we're really excited to be able to have the help. That's half the battle. Is just keeping an operation going is one thing, but having enough resources to actually make some great changes. So we're very positive about it.
Well, I appreciate the customer service focus, that it's a service. And out of 100 people who park at either a municipal lot or on a street parking situation, probably 98% of them park and are happy campers. And, you know, there's the one or the two that may have an issue, but sometimes, as I've found in my work, it's not always our issue that's the issue. So thanks for that. Councillor Van Holst, did you have something else to add?
Thank you. There might be a couple items here that would be worth hearing back about. The one I was looking at was the commissioners. We've got quite a bit of turnover. Maybe there's a comment on that, or I know you're going to look into that. That's something I might be interested to hear back about later, how those discussions went, unless there's a comment you have now.
Through the chair, we are always working together with our contracted party to improve the service delivery. We have, as you know, or may not know, we have changed the uniforms. So prior to that, they were wearing polyester pants and a tie, and it was very hot. There was no room for change. So we worked very hard with the management of the company to say it's not a good working environment when people are uncomfortable in 30-degree heat. So we gave them the opportunity to wear walking shorts. We've got golf shirts. So we are making strides. The financial compensation with the officers is difficult, especially with the change in the minimum wage. You can issue parking tickets or you can work at Tim Hortons. So that's going to be a thing we're going to have to consider when we go to another RFP, which will be in 2020, I believe, or 20, yeah, at the end of 2020. So again, the turnover, sometimes people have difficulties completing a training program, and we can't allow them to continue to try and do enforcement. You can't have somebody issuing a parking ticket that doesn't know the difference between east and west of Waterloo Street. So there's a variety of reasons for turnover. And again, we're working really strongly with the company to improve.
Thank you. And polyester pants are also very cold in the winter. So it's not just the summer. Not saying that I have polyester pants, but anyhow. The other piece with that is that's the face of parking services. And so you have, from a pay scale point of view, probably one of the lowest paid employee or subcontractor in the city that's the face of your parking services, and that's a real challenge, and particularly you go to customer satisfaction. So at that point, I'll take a motion to receive this report. Thank you, Councillor Van Holst, seconded by Councillor Hopkins. Once again, staff, thanks. I'm glad it's a positive experience, a helpful experience. I do think that the strategy piece is really you know, we've got this downtown thing that's like, you know, like an ongoing endless story, and somehow we pulling it together into a citywide parking strategy is challenging, but I think it does give something to coalesce around. So I'll call the question. All in favor? Any opposed? None. Thank you very much, and thanks to your staff, Horace and Annette, for their work on this. Jim, will flip back to you to item 4.5, which is the internal audit dashboard.
So in terms of the internal audit dashboard, we are making progress and we're working towards completing the audits in the 2017-2018 plan. For June 2018 to September 2018, we do have a lot underway in terms of fieldwork and reporting for homelessness prevention management. We'll be looking at scoping for the housing process review. We'll be starting the IT portfolio management project, as well as starting the procurement review. We'll be doing scoping and field work for the health and safety assessment that we're working towards, and then also scoping the IT security assessment, as well as the construction procurement and the class replacement project. You will see in terms of our metrics around objective and performance, we are higher than what our standard is, and we're going to be working with management in terms of identifying ways that we can bring down the issuing of the management comments, the final days to issue the report as well too. There's been some vacation and there's been some discussions back and forth when we work through the reporting, but it is something that we're going to work and strive towards in terms of improving. The other item on the dashboard that I wanted to bring your attention to is in regards to the class replacement project. We had originally identified in the plan to look at this from a post-implementation. So what that would mean is that management would implement the new process. From discussions with management, there was an ask that we don't complete a post-implementation, but rather a pre-implementation. They would rather value the support of internal audit to make sure their framework and their controls are accurate prior to moving towards go live, and we therefore bring it back to the committee to ask if you're in agreement with that.
Councillor Turner.
Thank you, through you, Mr. Chair. What would your thoughts be? Recognizing there's merits to both sides of that process.
I feel it's easier, you provide more value if you look at it before it's implemented than after and try to correct things that were done incorrectly. So I think that's more valuable.
And following up on that through the chair, also recognizing that has an impact on your timelines. The post-implementation would be a much later time frame for doing the audit itself. This would probably need to shuffle a couple things in the audit strategy.
I think from that perspective, the implementation date has changed such that it shouldn't impact the timing of the actual internal audit work.
So in essence, it's been delayed enough that where you would have done the post-implementation assessment, it's at the same time in the pre.
Post is now pre, nothing's changed. Okay, Councillor Fenholz. Oh, sorry, Councillor Hopkins.
Thank you. Thank you for that question too. That was on top of my mind too. I'm glad we've got everything covered. Got a quick question on the housing process assessment. What's the timeline? When are you expecting to start that? And if you could sort of just give me a very general overview of how that's going to look like. What are you going to be looking at, or how are you going to start that implementation?
Sure. In terms of that review, we had originally said that we would have the scoping discussion with management in around the July timeframe, and I do believe we do have it scheduled for July. We haven't scoped that particular review as of yet, so we still have to undergo the discussions with management to determine what that would look like. I think we kept it very high level in the internal audit plan that we'd be looking at the controls within the process.
If I may. Thank you. So we've implemented one or more improvements to our procurement process. And so when the report comes back, I'd be interested to find out how those were going rather than just look at them in time. look at them as if that's what's been happening all along. I think we've seen a bit of change in how that's gone on. So there's some, in terms of the procurement from the engineering department, they've made some improvements, and I'd be interested to find out how that's going.
So we have gone through the scoping assessment with John and Elisa, as well as Ian, in terms of looking at what the scope of that review will look like. We came to agreement that we will look at it from the changes that are taking place. So we will actually be looking at samples and testing from once the system has been in place. So that will move forward as we work through the review. Currently, we're looking at scheduling that review to start in mid-July.
Thank you.
Okay, anything else?
Yes, so the last item that we wanted to draw your attention to was in regards to the observation summary. So as you're aware, we do follow up with management to look to see how they're implementing their management action plans. So in regards to this report, you'll see that there are 4 past due observations. 2 is in Parks and Recreation around the cash handling review, and the other 2 are identified within Freedom of Information. We have had discussions with management. There are revised timelines that are in place that these observations will be implemented by December 2018. I know if you have any particular questions, management was prepared to respond.
I think this is on this chart, right? Okay, so just to comment on this one that we get. It's a really good way of getting something past committee that is virtually illegible, even with my eyeglasses on. So I don't know if there's probably a different version online that kind of can be expandable, but it's this one's a little painful to read, so.
Sorry, our intention is to publish the first page only on a go forward. So.
Any concerns with those delays on implementation? Sorry, go ahead.
Just on that final comment, will we still have access to online? I actually really appreciate this report as much as it's difficult to read. This is something that I really, really like to see that follow-up that we're having. Is that something we'll still have access to?
Yes, it is something that we can make available.
Yeah, it's just a matter of the more columns you get, the printers are not very. They're not very cooperative sometimes with it. So I don't know how we do it when it's a PDF, it's problematic. When it's an Excel spreadsheet, at least you can play with it in the Excel domain. So it's just a problem we have as we get more complex. So, okay, I'll have a motion to receive the last 2. Okay, Councillor Van Holst, seconded by Councillor Hopkins. All in favor? Okay, none opposed. Thank you. That's, I think that's the end of our public. Have I missed anything? No? Okay, that's the end of our public session. We do have one in-camera item, and so I'll look for a motion to go in camera. Councillor Van Holst, seconded by Councillor Turner. We will be moving across the hall into the committee room, and we will adjourn from the committee room directly. So with no further ado, I'll call that question. All in favor? Thank you very much.
Just state the reasons. Did you want that?
Which?
Just the reasons for the closed session.
The reasons are not published. Could you read them, please? Here they are. So the reasons are as follows: for a personal matter, identifiable individual, solicitor, client, privileged advice in litigation, possible litigation, a matter pertaining to personal matters about an unidentifiable individual with respect to employment-related matters, and advice and recommendations of officers and employees of the corporation, including communications necessary for that purpose, advice that is subject to solicitor client privilege, including communications necessary for that purpose, and litigation or potential litigation including matters before administrative tribunals affecting the municipality or board. That's all of them. Thank you very much. We'll be going in camera.